days like this makes you feel like using stop loss is a scam. Like, why did you even use it in the first place as a trader? But then days like this, makes you feel like, thank God you used a stop loss, else you would have lost massively. Just take a look at this trade here. This one here, I took it on silver. It smashed my stop loss first. You can see immediately I got in here, the market sold a little bit and then quickly pumped up due to fundamental reason. They quickly smashed my SA off before I started selling to my direction. You see, it finally came over to cross my TP over the weekend. But then take a look at this other one here on BTC. I had a good one here, and then I took this other one here. Just take a look at what happened here. Immediately I got in here, market quickly had this massive fall here and then swept me out. Now let's take a look at the situation here. If I hadn't used a stop loss here before, just imagine how much drawdown I would have been. Probably it might have even wiped out my old account because I was trading a prop firm, so they have a daily loss limit, and this could have probably breached that daily loss limit. Now this takes us back to the main discussion as a trader, which is, should you use a stop loss or not while trading? Well, it totally depends, and in this video I'm going to share with you some cool tips that will help you decide whether you need a stop loss or not. And for me, I always use stop loss. So let's get in. So guys, before we get into the main video, if this is your first time here, kindly help me smash that subscribe button, like this video, and also tell me what you feel down in the comment section. Now with this said, let's get straight and let's take a look at the advantage of using a stop loss and the disadvantages of actually using a stop loss, and let me help you decide whether you need a stop loss or not as a trader. So guys, the first reason why as a trader you need a stop loss is basically because for risk management purposes. So let's take a look at, for example, you took a trade, you did not set stop loss, and maybe your original stop loss was probably $100 stop loss position, and then all of a sudden the market run from 100 to 0, because it's highly possible that the moment you take a trade like the one you saw on my BTC trade, you can see that immediately I got into the trade, the market quickly took a reversal and then quickly fell straight up and then smashed my SL and even went way deeper. So for that particular trade, now if I hadn't used stop loss, what would have happened to my account? Probably there's a high probability that it would have breached my daily loss limit in my funded account. And once it breached my daily loss limit, meaning that I've lost every single progress that I've achieved with that account, meaning I've lost that prop firm account. So I had to buy another prop firm, go through the struggle of taking the challenge and passing the challenge again. Now this is one reason why you actually need a stop loss position if you are trading, whether you are trading a prop firm account or your personal account. One thing I advise to do is that for the purpose of risk management, which is actually helping you cut down your losses, I will personally advise you actually use stop loss. Now there will be days whereby you see some trade whereby, like, immediately you got into the trade will tap your SL and then quickly run back to your TP again. It's probably normal. These days will make you feel like, why did you even use stop loss in the first place? But then there are days whereby you feel like, thank God I used stop loss, because one thing that is highly possible in the market can run from 100 to 0 within split seconds, because the market is affected by so many things, geopolitical events going on, and then we have other fundamental event happening 24/7. So basically means that the market can run from 100 to 0 in no time. So if you are a trader out there, one thing I advise to do is that for the purpose of risk management and cutting short your losses, I will advise you actually use stop loss. Now the reason why you need it to cut short your losses is that provided that you still have capital to come into the market again, you can make back that money that stop loss took. Like for example, when I was showing you my snapshot, they see that I had silver quickly went to sweep my SL and they took out probably 1%. So if I'm risking 1%, that silver took out 1%. But then I took a trade on AUD USD, which went to 1:4 risk to reward. Now what did that one do? That one gave me times 4 for everything that I've lost back. So if I paid that silver out of it, I still have 3% up in my account. Now let's take a look at the other one on BTC. I had a trade on BTC that hit a 1:5 risk to reward. TP, excellent. Then I took another trade on BTC again, which went to hit my SL and even went way deeper. Now let's take a look at those BTC on for an example. If I hadn't used stop loss before, it probably means that that period whereby it went deeper, that initial profit that I made that is in my account has no value again. Maybe probably since I'm in a live account, I'm up about $500. Now probably my daily loss limit is about $250. Let me just say $250. That's not actually it, but let me just give it as an example. Now that trade actually went down and then went way deep as it is right now without me using stop loss. Basically means that the initial huge profit that I've made on this firm no longer worth it again, because BTC has actually swept it all off by going deep. Now, one thing I tell you as a trader is that for the purpose of risk management and always making sure that you are afloat in the market, I will advise you use a stop loss. Now, the second reason why you actually need stop loss as a trader is simply time saving. Now, how does using a stop loss actually save you time as a trader? Well, there are so many ways to save you time. When we come over to trading, why do you want to be a trader? You want to be a trader so I have this sort of freedom to live your life the way you want it. Because when it comes to trading, the main purpose of trying to go from broke to rich with trading is simple. We don't want to be working 9 to 5. We don't want to be on our decks working 9 to 5. Like, we don't want to be like living that broke lifestyle. Even though we haven't made millions with trading, but then the little money you are getting on your free time schedule, still having a lot of time left on the day for you to actually enjoy your money with your family and friends. It's actually one reason why we all choose trading, because it gives you this time freedom. Now, why do you want to sabotage this time freedom by sticking to your device every single day? So now the purpose of you using stop loss to save your time is simple. Now, when you take a trade and then you set your stop loss, what happens? You don't worry yourself trying to check your chart every single minute, because the reason why I said the stop loss is to preserve your losses. So if the market is going against you, once you get down to that particular stop loss place, it will take you out. So meaning that you don't have to spend your time always on your phone checking to make sure that your losses is not too deep. Because when you don't have stop loss, you don't know how much you are losing if the trade is going against you. You wouldn't know how much you are losing in the first place. So basically, this one will keep you glued to your screen, and then now it will make you live life like a brokey, because you are always on your phone. You don't have time to spend. When we even talk about making money in the first place, the main purpose of making money is so that we can have freedom and then be able to live our life the way we want it. Now, if you are trading without stop loss, we should keep you glued to your laptop or your phone every single minute. Now, where is the freedom? Where is the freedom? Where is the peace of mind for you to actually enjoy the money you are making from the market? Now, this another reason why you need to use stop loss as a trader is basically to actually preserve you from these unnecessary losses. Now, to avoid you from these unnecessary losses that will keep you glued to your screen. Like for me, if I take a trade right now, I will just leave it like that. Probably I'll come and check it an hour or two later. So between that hour or two, there are two things involved. Either it has smashed my SL, it has smashed my TP, or I'm in a good profit level where I can set my trade to break even. Now, once I set it to break even, I have nothing to do with that trade again. I let it go as it was down. I'll come and check it the next 4 or 8 hours later. It's either hit my TP or it has gone high in profit again. Then I'll shift my break even again, basically tracking the market movement. Now, that is the second reason why you actually need a stop loss. Simply, it's time saving, makes you live this free life that you should live as a trader. Now, the third reason why you need a stop loss as a trader is basically it helps you control your emotions while trading. Now, the main reason why a lot of you traders out there, you have this so high emotion attached to the having some notification, so I had to mute it. So the main reason why a lot of you traders have this sort of attachment to your trade is basically because you are so emotioned. And the reason why you have this emotional attachment is nothing but you are over risking. Now, two things can involve in over risking that will actually draw your emotions close to trading. One of them is you use a bigger position size, which a bigger lot size, that will put you in higher risks for a tiny stop loss position. Or secondly, you did not use stop loss, so you are afraid of your account getting blown. So this one will actually disturb you emotionally. Like for me, example, now when I'm taking a trade and I'm using stop loss, because I use stop loss in all my trades. So if I take a trade and I use stop loss, like I don't have this emotional attachment, like I'm not going to regret any amount of money I lose. Like for example, if I take a trade now and I say my stop loss position is $500, is $250. Now I set it myself that that's 1% of my account, $500. Now I have it there. $500 is 1%, so I'm setting it as a stop loss in my trade. Now once I set this particular one down, now I'm not going to worry myself. Like I'm not going to get that emotional drainage when this market actually hits my SL. Why? Because first of all, I accepted the loss. Like I personally agree that here is $500. Like it was like a contract to the market. I would say, market, here is $500 from me, and I'm using it to secure this position. If the position goes against me, take this $500. I mean, I personally say take this $500. Now, in a situation whereby I did not use stop loss, now I let this market go against me. Now, instead of me losing that $500, taking that BTC situation for an example, I would have probably lose about $1,500 to $2,000 in that single trade. Now, just imagine the difference. Now, with the help of stop loss, I only gave them $500. Without stop loss, I'll be running in about how much? In about $1,000 to $2,000 loss, which is really not good. So you don't want to keep yourself in this sort of emotional attachment to your devices or trading that will actually drain you and affect your real life. So one thing I advise to do is that what, use stop loss, and when you are setting this stop loss, make sure that what, you are using a value that you can comfortably lose. Whether you're trading a prop firm account, you're trading a real life account, it doesn't really matter. Just make sure that when you use a particular amount that you are comfortably going to lose, that when you lose it, like, you are going to have this comfort that, yeah, it's normal, it's normal, I will make it back. Like for me as an example right now, that one I lost on silver, AUD USD gave me times 4, so I have nothing to worry about. Now AUD USD gave me times 4, and I've had trades whereby if I hadn't used stop loss, I would have blown my firm a long time ago. Now the help of stop loss actually helped reduce all of this. Now, but the truth is that what, those are the 3 reasons why you should use a prop firm, but it's not always sunshines, because at times not using stop loss could also save you out. So now let's take a look at some reasons whereby you shouldn't use stop loss. So from here, I will actually tell you my final decision at the end of the video. But first, let's take a look at the reason why you shouldn't also use a stop loss. Now, 3 reasons why you shouldn't also use stop loss as a trader. One of them is simply whip splash. Now this whip splash is one thing that is actually preventing a lot of you traders from not using stop loss, and that is simply immediately you take the trade quickly goes, like what silver did to me, quickly goes, tap your SL, and then start moving into your direction. And now this is one reason why a lot of you don't want to use stop loss whilst trading. So it could be a valid reason as well, because it's very painful when a trade hits your stop loss and then start going to your direction, and this one will actually prevent you from making a lot of profit. So when I see people saying that you shouldn't use stop loss, this is probably one of the reasons why, simply because they've found themselves in trade over and over again whereby the trade just tap their stop loss and they keep going in their direction. Now this could be one valid reason why you shouldn't use a stop loss as well as a trader. So the second reason why you shouldn't also use stop loss as a trader could probably be due to manipulation, market manipulation. Now market manipulation happens once in a while in the market, and when it happens, it's very easy to identify. You see that when the market will be moving to a particular direction and then you trade that direction, but all of a sudden one thing you notice is that what, there will be a flash direction switch in no time, that the market will quickly reverse against you to go sweep off liquidity below, which is liquidities that are below the level where you entered, then the market start going in your direction. Now this could actually make it more painful. Now this one is different from the whip splash volatility. Whip splash volatility is simply the market is going to the right direction, but then immediately you take the trade, you quickly tap back to your SL before you continue its movement, or reverse to your SL before it continues to its movement. And now this other type of situation is whereby when you take the trade, the market will be very sluggish. Then all of a sudden you see that there will be a switch of direction, then the market will dip down a little bit, then come back up again to your direction. Now this one is often done by these big game players. Now these big game players actually manipulate the market when they see that the market is kind of sluggish. So when they come in at first, they will see that what, the market is an uptrend, so there will be a lot of buy orders. Now before they will buy, they first of all push this market down to the nearest demand level. In doing this, they sweep out a lot of stop losses for people who already have buy limit orders, people who are already holding buying positions. Now they also use this one to gain more liquidity to actually move the market. Now this could be another reason why it's not advisable to use stop loss, because after they do all the sweeping, the market will then reverse and they start going to the original direction again. That's why you see that in my supply and demand strategy, I have these levels I often mark as liquidity levels. Now these levels are the same levels that I'm trading from, but then they are less important as the main levels that I'm looking forward to trade from. Now this doesn't mean that the main levels I trade from doesn't actually hit SL. They also hit SL, but then it actually saves you from taking a lot of trade that will actually go against you during market manipulation phases. So if in case you want to learn my trading strategy, I'll be tagging the playlist in the video description as well, so you can actually check it out. Now here are some reasons why you need stop loss and some reasons why you don't actually need stop loss. Now you will ask me again, so what is my final decision on this whole situation, whether should you use a stop loss or you shouldn't use a stop loss? And my final answer will be use stop loss as a trader. Market volatility that go and tap, which is whip slash in the market that go and tap your SL and then move away, doesn't happen frequently. They happen once in a while. And then market manipulation happen once in a while, but if you identify the actual key levels in the market, it will prevent you from a lot of them. So even though you cannot prevent you from all of them, it will prevent you from a lot of them. But then one thing that you can actually get out of in the market as a trader is simply risk management. Like basically, for the sake of risk management, I would advise you to always use stop loss. Now with the help of stop loss, you can actually set a realistic risk to reward target when you are taking your trade, because you know how much you are risking for the trade and you know how much you are targeting. Very realistic. And then at the same time, with the help of stop loss, like it gives you this confidence to actually take trade and then go to bed, because you know that what, even if the market goes against you, it's only a penny that will be taken from your account and not a huge amount that you are not ready to let go. Now, let me say you found a personal account with $10,000. Now you took a trade and then you risked $500, and then your initial intention was that what, once your market gets to $500, you are going to close the trade off. Now let's say a situation happened, you no longer have access to your phone. Maybe probably you are busy doing something, so you are not really that close to your phone again. If the market is reversing against you, how will you know to quit it when you get to that $500, or that particular area whereby you said you personally quit it if the market isn't going to your direction after a given period of time? Okay, let's say you took the trade and then your phone went off. What will you do? The market can go against you and go way deeper and sweep the whole $10,000 out of your account, and you can't do anything about it because you let it happen. Okay, let's say basically anything can happen after taking a trade. Anything can happen. So basically, for me, one thing I'll tell you as a trader is that use stop loss. It's for your own safety. It's better than not actually using stop loss as a trader. So that's basically the point I have for you here. Simply, you should actually use stop loss as a trader to help develop you more as a trader. If you are not ready to take losses, then one thing I advise to do is that what, you are not ready to be a trader.